Welcome back to the second deep dive here at Daily Crypto. You've sent in a ton of news, and we've gone through it all to pick out what we think are the really crucial developments shaping crypto right now.
Yeah, absolutely.
Our goal today is, to look past just the price tickers, connect some dots, and hopefully give you a clearer picture of the shifts happening under the surface.
Exactly. It's easy to get caught up in the day-to-day noise, but the bigger trends, the strategic moves, that's where you really see where things might be heading.
All right, so let's get a lay of the land. Quick market snapshot. Bitcoin's hovering around $82,569, down 2.45%.
Yeah.
Ethereum's at over $103.22, also down maybe 3.26%. BNB, Solana, XRP, all seeing some red too.
Mm.
But what really jumps out, I think, is the bigger dip in some meme coins. Pepe down almost 9%,
Yeah.
Popcat over 8%, Dog with Hat, Bonk, even SHI, steeper losses there. What's the story?
Well, seeing those meme coins drop harder alongside the majors, it really highlights that connection to the traditional markets, doesn't it?
Right.
Reports show BTC, ETH, XRP all felt pressure when the NASDAQ and other indices dipped. That correlation, it seems to be growing. Macro factors, investor mood in traditional finance. It ripples through, even to the more, let's say, speculative corners like memes.
Interesting point. And it wasn't just memes and the big guys feeling it. AI tokens, Bittenser, Render, Grass, they also took a tumble after some key Microsoft news.
Yeah, saw that.
It feels like news from, seemingly separate tech areas can hit crypto narratives pretty hard, especially the tech-heavy ones like AI.
Absolutely. It just shows, crypto doesn't live in a bubble. Wider tech trends, how related industries are doing, they can definitely push things one way or the other, shape how investors see things, where the money flows.
Okay, let's pivot a bit. Specific developments. Donald Trump's name keeps coming up. His tariff announcement is apparently stirring up crypto chaos, but some are framing it as just a classic business technique.
Right.
How do you read that? Politics hitting crypto.
Well, it's an interesting angle. Tariffs aren't directly aimed at crypto, obviously,
Yeah.
but they inject uncertainty into the economy, right? And that can make investors nervous, maybe pull back from riskier assets. Crypto often falls into that category for some.
True.
So the classic business technique line, it suggests a strategic play with wider economic effects. It wouldn't be shocking if some of that uncertainty spilled over into crypto markets.
Makes sense. Okay, let's shift to Bitcoin mining. Quite a bit happening there. Cango, a China-based company, is making a huge move, selling its China ops for, what, $351.9 million?
Mm-hmm.
And pivoting entirely to Bitcoin mining. That's a big change.
It is. Cango basically exiting its main business in China to go all in on Bitcoin mining. That says a lot, doesn't it?
Yeah.
It suggests they see serious long-term value and profit potential in mining globally, even with all of the regulatory shifts and, geographical changes happening. It's a strong bet on Bitcoin's future.
And then there are these reports the Trump family might be getting into mining directly. Mentions of BSTR miner and NR7 miner as cloud mining things they're linked to. That's notable.
Yeah. The Trump family potentially entering the space definitely brings more mainstream eyes to Bitcoin mining. When well-known names get involved, it can sometimes signal, growing acceptance, maybe attract more investment.
Right.
Of course, we'd need to see the specifics, the scale, the actual impact, but the headline alone makes you pause.
We also saw Enish, a Japanese gaming firm, make its first Bitcoin buy, close to $680,000. A gaming company putting capital into Bitcoin as an asset. What's the takeaway there?
That really highlights Bitcoin being seen more broadly, beyond just, digital cash. It's becoming a legitimate asset class for different strategies.
Like a treasury asset.
Exactly. Could be diversification, could be a bet on long-term value.
Yeah.
It shows Bitcoin maturing, getting more acceptance in the wider business world, even from seemingly unrelated sectors like gaming.
And on the infrastructure side, Kyrgyzstan partnering with the founder of Binance to boost its blockchain setup. That sounds like a national level commitment.
Yeah.
What could that mean for Kyrgyzstan?
Oh, that could be huge for them. Partnering with a giant like Binance brings expertise, resources, maybe investment to build out their whole blockchain ecosystem.
Yeah.
Could spark innovation, make government services more efficient, maybe attract new businesses. It's a significant move for a country like that.
Okay, let's touch on DeFi. News about an exploit on Hyperliquid's Jelly protocol. It's being flagged as a potential risk for other platforms too. Security in DeFi. Still a major headache, huh?
Oh, definitely. The jelly exploit is another stark reminder of the risks in DeFi. So
Yeah.
potential is incredible, new services, more access, but the security of those smart contracts, the
Yeah.
protocols themselves, it's absolutely crucial. Every exploit, while worrying, is also a lesson, right? The community learns, hopefully builds stronger stuff.
On a brighter note, though, we're seeing steady progress in tokenization and institutional adoption. WisdomTree launched a tokenized fund platform across multiple blockchains. What does that mean, practically? A big traditional player doing this.
It's a really big step, merging traditional finance and crypto. Tokenization just means representing ownership like a fund share as a digital token on a blockchain.
Okay.
WisdomTree doing this across multiple chains shows they recognize the benefits, efficiency, transparency, maybe lower costs. It could also open up these investments to more people comfortable with digital assets.
And Alchemy Pay enabling fiat on-ramps for HBR and USDC on Hedera, making it easier to swap regular money for crypto seems vital.
Yeah.
Why are these on-ramps so key?
They're the bridges, right, between the old financial system and the crypto world.
Mm-hmm.
Cutting down the hassle of converting fiat to specific crypto like HBR or USDC on Hedera just makes it easier for everyone, individuals, businesses to get involved. Boosts liquidity, drives adoption. Simple as that.
Republic buying INX at a massive 631% premium, mainly for the U.S. trading licenses, it seems. Why pay so much for those licenses?
That huge premium just screams how valuable regulatory compliance in those U.S. licenses are. It suggests Republic has a very clear plan to expand regulated access to digital assets in the U.S.
Right.
That could unlock serious growth, maybe big institutional partnerships down the line.
Even BlackRock, using BNY Mellon to publish fund data on Ethereum. A giant like BlackRock using a public blockchain. What are the ripple effects there?
That's quite a move. It shows a growing comfort level, a recognition of blockchain's potential, even for the biggest players.
Yeah.
Using Ethereum for fund data could mean more transparency, maybe more efficient data sharing. It fits that broader trend of traditional finance, not just watching, but actually integrating with blockchain infrastructure.
And we're hearing Latin America's biggest bank might launch its own real stablecoin. What could that do for digital payments, financial inclusion in that region?
A stablecoin from a major LATAM bank, that could be a game changer there.
How so?
Could offer a stable, efficient digital payment option, maybe cut transaction costs, reach people with limited bank access. It also reflects that global interest in CBDCs and stablecoins generally.
Okay, let's swing back to meme coins. Always volatile. Talk about Dogecoin hype maybe dying down, especially with Elon Musk saying DOGE isn't part of U.S. plans. How much weight does his word carry now?
Musk's comments definitely throw some cold water on DOGE. So much of its price and buzz has been linked to him, right?
Totally.
Him saying it's not in U.S. plans could certainly dampen spirits, maybe affect its long-term view, really shows how reliant some meme coins are on celebrity nods.
But it's not all doom and gloom in meme land. Shiba Inu's price is apparently targeting a big jump, like 60%, as Shibarium, their layer 2, enters its gold age. Can you quickly explain Shibarium and why a gold age matters?
Sure. Shibarium is a layer 2, basically a network built on top of Ethereum where SHIB started. It handles transactions off the main chain to speed things up and cut costs. So a gold age probably means it's working better, getting used more within the SHIB ecosystem, maybe offering more actual utility that could boost demand and, yeah, potentially the price.
On the flip side, analysis on why coins like Pi Network, Pepe, Athena are crashing. Right. What usually causes these drops?
Oh, it varies. For newer ones like Pi, maybe missed deadlines or unmet hype.
Okay.
For meme coins like Pepe, could just be profit-taking after a run-up or sentiment shifting on social media. For something like Athena, maybe broader market blues or specific worries about how it works, its sustainability. It's usually a mix. Speculation, market trends, project news.
But then there's this report of a massive $27.53 million long position opened on Pepe. That's a huge bet on it going up. What does that signal?
Along that big definitely shows someone or some group has strong conviction Pepe's price will rise. It's a high-stakes gamble.
Yeah.
Could indicate a sentiment shift, maybe anticipating something. But, you know, big positions can get wiped out too if the market turns. It's not a crystal ball.
Shifting back to infrastructure, Datagram unveiled a decentralized backend for scalable DePIN networks.
Hmm.
Decentralized physical infrastructure, right?
Yeah.
How does a scalable backend help there?
Exactly. DePIN is about building real-world infrastructure like Wi-Fi, energy grids, storage, using blockchain and crypto incentives.
Right.
A scalable, decentralized backend is vital for these networks to grow. It lets them handle tons of devices and users without a single point of failure, makes them stronger, more resilient. Datagram's work could really push DePIN forward.
And Water is using Avalanche to bring the, $20 trillion commodities market on-chain?
Mm-hmm.
That's massive.
Mm-hmm.
What's the benefit of tokenizing commodities on Avalanche?
Huge potential there. Tokenizing commodities can make trading and settlement way more efficient. Plus, better transparency with everything on an immutable ledger.
And accessibility.
Yeah, allows fractional ownership of things that are usually big and hard to trade, like barrels of oil or whatever. Bringing even a slice of that $20 trillion market on-chain could unlock enormous value.
Paraswap, rebranded to Valora, launched Delta V2.5 for smoother trading. User experience is often a hurdle for DXs, isn't it?
Hmm.
How crucial are these kinds of upgrades?
Oh, absolutely critical. Making decentralized exchanges easier to use is key to getting beyond just the crypto natives.
Mm-hmm.
By rebranding, improving the platform, Valora is trying to tackle that, make DeFi more user-friendly, compete better with centralized exchanges. A smoother experience lowers the barrier to entry.
The Aptos Foundation is investing in Universal Health Token, advancing decentralized healthcare. That sounds really impactful. How could blockchain actually change healthcare?
The potential in healthcare is immense. Better data security, patient privacy, giving people more control over their own health records.
It is big.
Could also streamline data sharing between doctors, cut admin costs, enable new research models. Aptos investing here shows growing belief in blockchain's power to really transform that sector.
Okay, regulatory landscape. A Senate committee passed Trump's pick, Paul Atkins, as SEC chair, new SEC chair.
Mm-hmm.
Always a big deal for crypto. What might change?
Yeah, a new chair can definitely shift priorities, how rules are interpreted, enforcement styles. The whole industry will be watching Atkins closely, his statements, his actions, to figure out his stance on digital assets, regulation, investor protection, innovation, all of it.
Nigeria's president signed a law classifying crypto as securities. That's major for a big African market. What happens when crypto gets labeled securities?
It pulls digital assets under existing securities laws. Exchanges, crypto businesses there will likely face new registration rules, reporting, investor protection stuff.
Good or bad?
Could bring clarity, maybe attract institutions, but also adds compliance costs for businesses. It's a big shift.
And the U.S. Treasury's OFAC sanctioned crypto addresses tied to Russia's Garantex exchange, trying to cut off Houthi financing. Shows crypto's role in global security now.
It really does. It shows governments know crypto is used globally for good and bad, and it shows their tools for tracking blockchain activity are getting better. They're willing to use sanctions to hit illicit finance involving crypto, puts pressure on the industry to comply.
All right, nearly there. Quick hits on exchanges. Binance Wallet hosting its 8th TGE featuring Stakestone. What's the deal with these TGEs on big exchanges?
Token generation events on places like Binance give new projects huge visibility, liquidity, and a stamp of, well, perceived legitimacy.
Like a launchpad.
Exactly. Reaches tons of potential investors, often drives trading activity. It's a major boost for new tokens like Stakestone.
Binance also started round 2 of its Vote to List campaign. Users voting on listings.
Interesting idea. Pros and cons.
Yeah, it engages the community, builds excitement, helps the exchange gauge real interest.
What?
But, risk of manipulation or maybe projects with loud communities getting listed over ones with stronger fundamentals. It's a tricky balance for exchanges.
Bybit partnering with Zodia Custody, backed by Standard Chartered, after some wallet controversy, highlights the need for secure custody, right?
Absolutely paramount. Keeping user funds safe is fundamental. Exchanges are targets. Losing funds crushes trust, invites regulators. Partnering with regulated custodians like Zodia with strong security and insurance is how exchanges show they're serious about protecting assets.
Kraken, using British Clearbank for GBP clearing, adding RLUSD for XRP trading. Sounds technical, but what's the practical upside for users? Makes things better for users. Local clearing like Clearbank for GBP means faster, cheaper deposits and withdrawals for UK folks.
Okay.
And adding new pairs like RLUSD XRP just gives traders more options, more liquidity, makes it easier to trade what they want.
And lastly, this early Ethereum ICO participant depositing $3 million into Binance. What can we read into big moves from early investors like that?
Well, large deposits from OGs can sometimes hint at renewed market interest, maybe plans to take profit or shift into other assets. People watch these moves closely because they can sometimes precede big market shifts.
But not always.
Exactly. Can't jump to conclusions based on one transaction. It's just another data point.
Okay, let's try and tie this all together for our listeners.
Yeah.
We've seen a market feeling some downward pressure, clearly linked to wider economic stuff.
Mm-hmm.
But under the surface, tons of activity. Big traditional finance players dipping toes into tokenization, stablecoins, companies making strategic shifts into mining, nations exploring blockchain infrastructure.
Right. A lot of building happening.
The meme coin craziness reminds us it's still a speculative market in places, but the DeFi and blockchain tech advancements point to something more mature, more connected maybe.
That's the tension, isn't it? The speculative froth versus the fundamental building.
And where it gets really interesting is that intersection. Traditional finance meeting crypto tech, regulators trying to keep up. It's creating this really dynamic mix of opportunity and risk.
Definitely complex.
So what does it all boil down to?
So,
I think it means staying plugged into these deeper trends beyond just the daily price charts is crucial to really get a sense of where crypto is going.
agreed.
Think about what these infrastructure builds and institutional moves might mean for long-term stability, how regulations might shape things. Which brings up a final thought. How do all these different threads, the meme coin mania, the institutional adoption, the regulatory moves, how do they all actually connect? And maybe more intriguingly, what could be the biggest surprise waiting around the corner in the next few months? Something to chew on.